Hello everyone, welcome to the end of week market analysis for fiscal week 37, which is the week of trading ending 17 September 2021. So we're going to look at the same three charts as we did last week. These are the weekly charts, the diamonds, which is the Dow Industrials on the left, the SPY, S&P 500 in the middle, and the Qs on the right hand side here. Let me see if I can open up my pen so I can draw on this. There you go. I'm working from a different location today, so I don't have three screens. So I got to leave this in place. Okay, so let's take a look at the weekly chart. On the diamonds, the weekly is looking like the daily weakness might be leaking over to the longer term chart. We'll have to wait and see what happens this week, but we have a lot of issues going on around the world, locally and globally. Probably we've got this inflation nervousness that's going around. I don't know about your household budget, but not many prices or things that I pay are going down in price. As a matter of fact, they're all going up in price. Gasoline, food, insurance, you name it, they're all going up. The only thing that seems to be going down in the short term here is the stock market, but we'll get to that in a minute. We also have this China problem with their real estate bubble and this Evergrande situation, which seems to be, causing a lot of turmoil in China, and maybe that's going to be China's Lehman Brothers. We'll have to wait and see, but that's having a ripple effect. We've got the U.S. debt that's totally out of control. We've got Afghanistan, and we've got the never-ending COVID. But so there's a lot of negative news, and maybe it's getting reflected in stock market concerns. So let's jump into the charts here. I'm going to expand this chart here. So you can see that the Dow is now firmly down below the single standard deviation line that we've been talking about the last few weeks. The Chiku line, which is this blue line, is not yet below the prices, but it's heading in that direction. We have increasing volume on the weekly basis. We have a MACD that is certainly decreasing, and an on-balance volume that's decreasing. On the S&P 500 chart, if you look back in history, we see these sort of areas where the prices have come down to touch that single standard deviation line, and they bounce right back from it. Now we're in a little bit of a trouble because the prices have dropped down below the standard deviation chart, and they're now sitting at a level that we need to have a bounce from if strength is going to return back in the short term. We need to start building a base in this area. Unfortunately, we had a lot of volume selling out of the market last week. So this is the volume line for this week. We've got a MACD that's heading down zero. We got an on-balance volume that's looking like it might be deteriorating, and ADX that looks like it might be turning bearish. So we'll have to wait and see what happens in this week's trading. We'll take a look at the NASDAQ chart, which appears to be the best of the three. We're still way above the single standard deviation line, which is in this area. We've broken below this level of support, and we're between this one. So we'll have to see what happens in here. Ideally, we'd like to have a weekly consolidation period in here. We'll have to wait and see what happens. On the bearish side, we've got increasing volume. We've got a MACD that's just hit a new negative switch. On-balance volume doesn't seem to have moved very much, and the ADX seems to be hanging in there. So the Qs are definitely the best or the strongest index at the close of this week's trading. Let's take a look at the daily charts of these indexes, and we'll see what happened over the last prior weeks of trading. And as we all know, it's not pretty. This is the Dow Industrials on the left again, the S&P 500 in the middle, and the Qs on the right. So let's just go through this with a little more focus on the daily chart. So my concern with the daily chart, especially on the Dows, is that this looks like it's a triple top to me. Triple tops are notoriously indicative of a top, at least an intermediate term top. You can connect what's called the neckline from the bottom of this guy right here to this guy. And if we're below that line, that tends to be additionally bearish. So you can see on Friday's trading, we dropped below that line. The green cloud is sort of a congestion area, so you can't draw a lot of conclusions until we either break out more above it or down below it. Stay tuned for my next book on how to interpret Ichimoku cloud charts. It's very insightful. We've got increasing volume on a down day. We've got a MACD below zero, which is not a good sign. MACDs below zero typically have muted rallies up to a line of resistance. You could probably draw a line of resistance across these two tops and sort of figure that you could get a bounce up to here easily in a weak market. On-balance volume is looking bad. And what's really bad about this line here on the ADX is it's showing an increasing number in the ADX, which shows an increasing strength of the downtrend. As a matter of fact, it's up to 23, which is not good. On the middle chart, which is the S&P 500, you'll see again that we're below this single standard deviation line. We bounced off it from here. We bounced off it here. But now we have broken down below it solidly on significantly increasing volume on last Friday's trading. That was Friday's trading, way above, almost double the 50-day average volume. We got a MACD that's below zero. We got an on-balance volume that's negative, and the ADX is sort of muddling around here, not providing any direction at all. So S&P 500 is very worrisome. We need to hold this line of support. If we can build some sort of a consolidation pattern in here, maybe we'll be good to go for another leg up. We'll have to see on this week's trading. But this was a pretty solid support line. If we drop below here, I think that we might be in for some more downside. Who knows where it will bottom out. Again, the NASDAQ is a little bit better shape. We're way away from the single standard deviation, but we are right at, well, if I could draw a straight line, we're right at this sort of uptrending support line here. So again, we would like to see some sort of a consolidation pattern in here with maybe a breakout above it at some point. If we break down below it, then I think lower prices are just around the corner. We've got increasing volume. We've got a MACD that's almost below zero. Not quite. I'm sorry, a MACD that's almost below zero. An on-balance volume that's getting weaker, and an ADX that's really not telling us anything. So I think the watchword for this upcoming week is caution. I don't think we're in the right place for some very aggressive shorts unless they are on a short-term basis. But having spoken about shorts, let's take a look at the contra ETFs that I started talking about last week and see where we are on those. So if you remember, contra ETFs typically go up when the broad market goes down or the index that they're attached to goes down. And you can see on the short Dow ETF, the Chiku line has broken above those local prices, which is quite bullish. We got this red cloud in front of us, which acts as resistance to that ETF moving up. It may just go right through it. You have no way of knowing. But we did have increasing volume on an up day for this contra ETF, which is a good sign. The MACD is above zero. The on-balance volume is looking lively. And the ADX is showing us that the upturn trend is increasing. Let's look at the short on the S&P 500. It's not as strong as the Dow. I think you could possibly say there's a line of resistance across these tops that the prices are just starting to move up from or through. Chiku line is not yet above the prices, but MACD is above zero. The on-balance volume is moving up, showing this increase in pricing on up days. But nevertheless, we still have this red cloud in front of us, which is an area of resistance for higher prices. On the NASDAQ short ETF, the SQQQ, I think it's a little bit weaker, and I think that in turn represents the strength of the NASDAQ itself, like we just talked about. I think you can fairly put a downtrend line up right through there. So you would need to see the SQQ move up or the NASDAQ move down in an opposite fashion before I would be comfortable jumping in on these contra ETFs for the NASDAQ market. Again, we got this red cloud in front of us, which shows a little bit of resistance, but we got increasing volume. MACD's not yet above zero. On balance volume is showing a little bit of strength, and the ADX is not really providing much information. So that's it for this week. I hope this helps. Again, I am not a financial planner. You should talk to your financial planner or other significant others before making any trades. But I hope this analysis helps to adjust what you think you might want to do or talk to those people about for next week's trading. Again, have a great rest of the weekend, and we'll talk to you next week. Thank you.